All right. Good night. You know, it is currently 2:23 a.m. Monday, so a little bit late, but I had to get this out, and we are going to be doing an analysis for this current week. Yeah, so let's get started. Looking at the dollar index monthly chart. Well, before we even look at the charts, just want to say that we have FOMC on Wednesday, so December 18th. So from 2 to 2:30 p.m. That's going to be a very volatile 30-minute window. So because of the anticipation of that FOMC meeting, it's actually the press conference. Because of that, it's a good idea to usually just wait and sort of observe the first 2 days. That's typically what I do, is not really expect much. Now, yes, the market is going to move. It's not going to, basically the way I like to think of it is if we look at the daily highs and lows, previous day high, previous day low, I'm almost certain that it's going to touch one of those, and we'll get into what side of the marketplace later on in the video, but just a nice little preamble. It's a good idea to wait Monday, Tuesday, Wednesday up until FOMC. Then after FOMC, things start to get a little bit more easier. Maybe not, but just depending, gives you a little bit more insight. Most importantly, it clears out one side of the marketplace or liquidity, and then you can start to hunt the other side. So that's the way I like to think of it, and how it's just been a little bit more easier for me to kind of process the week. So you don't have to really stress all 5 days. You kind of cut yourself 3 days of slack, and then Thursday, Friday, if there's something nice, by all means, if you have the confidence, if you've done the back testing, go ahead. So on the dollar, I like the previous month high, so 108.071 is that level. That is on a monthly chart, so you have to kind of allow for some time to pass in order to see that, and it is completely reasonable to expect some sort of retracements. It's not just one shot straight up there. It's gonna take a little bit longer than we'd like it to, a little bit longer than the weekly chart also, and definitely a little bit longer than a daily. So, and you'll start to see that even though I like this previous month high, most of this analysis on the dollar index for at least this beginning latter portion of the week is going to be focused on really working inside of this wick right here. So that is the December 2nd, so that's the Monday for the week, December 2nd, 2024 candles wick. So note that and watch how this current candle for this week goes for a discount. So how it trades lower into here for a discount. So I like this dealing range also from this high to this low. Study the equilibrium. This is another reason why I'd anticipate dollar to gravitate inside that wick, because really if we just start from here, from this week, and then focus on this wick, we have basically what this wick has done is it's went up, came down, and then this candle came all the way back up and crossed over the high, traded a little bit above it, and I would expect it to sort of come back down there and work inside of a discount relative to the dealing range, if that makes sense. So dollar index daily chart. Looking at this, the very first thing my eye jumps to is the work done around and inside that daily fair value gap, annotated as the November 13th 2024 daily fair value gap. So look at how we have came down into it, short-term low, came back up, and then ran that short-term low, and then sort of worked into it, reclaimed it, touched it. Look at the work over here inside the lower quadrant, consequent encroachment, and then it worked up worked off of the higher quadrant, the upper quadrant, sorry, and then came up into a premium, and then on Friday we kind of just stalled. So really, to me, this kind of looks like it may want to clear some of these lows down here. We do have a small little volume imbalance in here. If you check that, there is a little gap. So should we come down into here, I do like that. That's just my opinion. But you'll kind of see why I'm a little, I don't know if this is the proper word, but eerie or hesitant to kind of put that out there. But that's just sort of how I'm being honest. So also we do have this breaker here. So we look at the market structure: low, high, lower, low, and then break of structure here. So I do like this breaker. But the mean threshold of that breaker, that is the line in the sand for me. Personally, I prefer we stay above that for a risk-off environment. So here that is, or not. Where is it? There we go. I don't know. Whoa. There we go. Slides is being weird. So that is the mean threshold right here. You can see I have that annotated as the daily bullish breaker, December 2nd, 2024. And also, you'll notice how over time, from the first stream, first video, my annotations have gotten a lot neater. So, growth. Anyways, so before I do, move on to the next slide, I guess my daily bias going into up until Wednesday, like for the first half of the week, which would be Monday, Tuesday, Wednesday, is kind of, keyword kind of bearish. But like I said, monthly chart, I still like this high right here, all the way up here, but it could take time. It can take really as much time as it needs. I'm not in any rush. Do your thing, man. I'm here. Once you get your stuff together, I'll be here, So it's not like 2025 ends it all. So that's the way I'm thinking of it. If this wants to go to the next slide. Okay. So 4-hour chart. Things get to be a little more tricky as we start to work down into lower time frames, but that's just because there's more variables. So a question is, and actually it was not supposed to, I don't know what's going on with slides today. There we go. So kind of ruins the whole presentation, but that's okay. So what is the current dealing range based off of the current market price? So right here, this was almost 2 hours ago. As it took me about 2 or 3 hours to get all these screenshots and everything. So we might already have been down here at this low, which is kind of sort of what I'm looking at, and you'll see why. But the question was, what dealing range is like apparent to you? Is it from here to here, here to here? Well, I like this one, from this high to this low, and you can see how as soon as we came down here, we came back up, and we start to work at the equilibrium a little bit. So watch the equilibrium of that, and I think for the latter portion of the week, like the first 3 days, or really until we exit this dealing range. So say we fail to touch the equilibrium, I think that could be a good enough reason to justify a return back into this daily bullish breaker. So that's that high, this blue line right here. That's that mean threshold, and then that's the low. So you kind of see why I'm sort of leaning towards a bearish bias. For the latter portion, for the beginning of the week, we do have equal lows here, here, here. Just to me, I in all my presentations, I've never really seen how to put this into words, but it's kind of just like if you put a chart in front of me and with nothing else and just showed me this, no annotations, this in itself is sort of like a good enough reason for me to kind of be like, okay, I think, yeah, I can gravitate here, but if it doesn't, it's just feedback. So, okay. So, I'm going to give it a second to load. No. Why is it doing this? There we go. So, in terms of highs and lows, just kind of looking at the facts, the first high, if we were to continue higher, which this would sort of kind of negate the idea that I just said about this equilibrium and then working down into this bullish breaker, but we're just playing devil's advocate here. So let's say it does go up into this equilibrium on this candle or the very next. Well, then the next high would be that right there. And if it continues lower, well, then that's that low right there. But personally, I favor this low. So, right after I'm done with this recording, I'm just going to see where price is relative to that low and then that equilibrium and that high. So, fun, very fun. Next page. So here's the current new week opening gap, and I will show you some other new week opening gaps that I like, selected by me, and then those two salient swing points. Everything here just says lower to me, but that's kind of just the Judas swing speaking, because once again, the higher time frame, I'm still bullish and have not lost sight of that. So, I do want to talk about this, what is viewed as a balanced price range. While this might be, still a balanced price range, it's just, I don't think it's a good enough reason to be going long. In this picture, we haven't really, violated it, but the violation would be below this low. So, just watch that. It was really clean. It's surprisingly clean. In one candle it went down, priced in the low on Friday, and then in one candle it overlapped that whole entire thing. And I don't know, old me, I can't really, maybe a couple months ago, really, six months ago, that would have been viewed as a bullish order block. But now I don't really think it's gonna hold this fair value gap and start to work higher. I think that this low is next. Alright, so that's it for the dollar. And by the way, these are the new week opening gaps that I'm watching. So you can see that we have the on the upside, we have new week opening gap low for November 24th, 2024, and then this new week opening gap high for from November 17th, 2024. So that's kind of why, also another reason why I do like this whole entire segment of price action over here, or whatever you want to call it. I like this low, basically. And yeah, S&P monthly chart. You can see that we worked into the previous month high, and so I just want you to note that previous month high. This is something I always do. These monthly levels, when it's really in the middle, and it's one side or the other, kind of like the dollar index, I like to choose one or the other. So it's kind of like 50-50, but then using all the other analysis, it really it helps. So kind of narrows things down on the monthly chart. But right now basically all that previous month high is telling me is that, okay, yeah, we swept it. Do I think it's gonna sweep it, right, like it's already done and then just trade all the way lower? I don't know. Do I think it's gonna sweep it, come back inside the range, and then start continuing higher? I don't know. This monthly chart does not tell me enough. It's just a level that gets transposed down to a lower chart. So, yeah. Alrighty, so here we do have the S&P weekly chart. Now, this month is this week is a rollover week. So by about tomorrow, meaning Tuesday, the contract is going to roll over, and the open interest on the contract is gonna sort of start to fade for this month, or this code for Z, and then we're gonna roll over to H. So just thought I'd throw that in there in case you're watching this and you forgot. But weekly chart. Note the weekly fair value gap formed on the November 25th, 2024 candle. Typically, something like this would be bullish, but because we have FOMC this week, it's important to wait before jumping the gun on anything. So, yeah. But something I'm sort of keeping an eye on is when we do reprice to it, if we reprice to it, how we do it. So, another thing about that fair value gap. So, for anyone actually taking notes on this, which is me, I would sort of I started on the monthly chart, so you would kind of have a header one for S&P monthly, and then I worked down into the weekly, so that would be a header one again as S&P weekly chart, and then now I'm really focusing on this fair value gap. So as soon as I start talking about this fair value gap, you can have a header two as the I don't know, for example, me personally, if ICT was doing this, I would just put a header two and say ICT discusses expectations on weekly fair value gap November 25th, 2024. So yeah. But keep in mind that it's a good idea, or a good rule of thumb, to not target the low or use that for any actual trade targets, or yeah. But assume we do trade there, it goes to show kinda that the market may be entering time distortion, especially with the holiday season. So this means I just wouldn't expect as much or a lot to take place. I'm trying to get more comfortable with this idea. I think really, honestly, I'm pretty good at it. I don't feel any need to rush ever. I know after seeing this for almost 2 years, 3 years, and having it just fortified and constantly reinforced in my head that these setups are going to continue forever. I do want to say though, one thing is that when ICT himself sort of said oh, it's low probability, or oh, I'm done for the week, the algorithm's not going to do anything, that didn't really throw me off. It just I always heard that and just thought that not really, but I always thought that the markets were just shut down. Not really. What I mean by that is I just thought they wouldn't move at all, but it's not like that. It's just as traders, we want to manage risk, and we want to find A+ setups. And if you're just pushing and pushing and pushing and pushing and pushing every day, you're gonna start to sort of kill your win rate, which means that you get B+, and then you get C-, and then occasionally you'll get Fs, if that makes sense. But if we wait and just be patient, then you're more, I'm not 100%, but if you have the experience, or if you kind of know what you're doing, I feel like you get a little more, what's the word? Demanding, I guess. That's the best word to use. And so anyways, second, I just want to add how last week's price action traded below the prior week's opening price, which by theory creates a change in state of delivery, but I'm not placing too much emphasis on this, just because we're entering, at least next week, we'll be entering the holiday week, which, once again, it's not like everything's just gonna stay flatlined at one level. It's gonna just kind of stall. So that's sort of me forecasting time distortion, but it just really depends. Like, if we trade all the way down to this low, which we're not targeting, it's just kind of like a level that you have to keep in mind. If we trade all the way down there, I think that it's kind of just like that's a good time to close out the week. And then also we do have FOMC, so anything could really happen. Like, really, like, anything could happen. It could whiplash one way and then boom, 180-degree turn completely opposite of what you thought, and just go crazy. So that's what I'm thinking. But let's just say we do trade down to this low, which we're not targeting. I think that's the third time I've said that, so no more. But let's say we do trade down to that. I think in 2025, considering our higher time frame dollar bias, I think that this could be a inversion fair value gap, but I'm not operating under that idea or that premise right now, just because it would just be way too early to expect that. Like, first I would have to see it go down, and while we're beneath it, I would want to see it come up, smack that, and then start to trade a little bit lower. But yeah, for now, let's just move on to the next time frame. And here is the new week opening gaps that are in close proximity, and then we have this one all the way down here. So that is kind of far, but it's a nice little magnet, right? So it could gravitate to that, but I'm not saying that it's going to go there. I'm just kind of looking at this range. So if I were really to encapsulate the range from this new week opening gap, what is that? The new week opening gap low, November 24th, 2024, and then this new week opening gap up here for December 7th. So that's kind of, if you were to draw a fib on that from this high to that low, you could honestly use that daily chart. So I just want to talk about this fair value gap. Let's see. It was, first of all, let's talk about the annotation because it's kind of lengthy. Daily, bearish inversion fair value gap, but the candle is a buy side imbalance, sell side inefficiency. So that's why I have it busy right here. And usually if it's like a volume imbalance, I'll just add that, but I am noticing that that is the wrong anchor. So make sure if you're drawing that out, which I'm going to change this right after, I just thought it's important to point out, make sure it's the closing price and not the opening. And so just the feedbacks that I've gained from this fair value gap, after we formed it on this candle, the very next day, went down into it, traded into the upper quadrant, and then created a new all-time high. After that, it traded down to it, right, acted as inversion, stabbed a little bit, or poked a little bit lower. I don't even want to say stabbed. I would say stabbed would be, like, this isn't really anything specific, but would be below this low. If it took out that low, it would be a little more violent, but it didn't, so it kind of saved these lows. If you look at this low here and the low here. Anyways, next day, went up into it. So at this point, I'm kind of like watching it and then changing my expectations as real-time price updates, and I'm looking at that as a reclaimed fair value gap because it went beneath it. It took out that swing point right here, which is the candle 1 of that fair value gap, went back above it, and I wanted to see it act as a reclaimed fair value gap, but it did not do so. Traded back beneath it, and then the very next day we went up into it, traded all the way to the high, and this is on Friday, and smack down below. So now just like the way to say it, or the best way to kind of just throw it out there, is this is a daily bearish inversion fair value gap. It is a buy side imbalance, sell side inefficiency, but it's going to act as resistance. It's also the volume imbalance, which you make sure you have it anchored properly. And it was formed on December 4th, 2024. So almost, what is that, like 2 weeks? So it's 2 weeks and we're still at that level. So, you know, I would like to see it go back up into there one more time. But stay in the lower quadrant. So kind of like how ICT says, you know, if a bearish, let's just say this is a bearish fair value gap. That's kind of what we're treating it as now. If it's bearish, it should stay in the lower quadrant. That's optimal. If it's not as bearish, it'll work up into that higher quadrant, upper quadrant, and then let's see. So that's what I'm thinking. But we do have low here, low here, low here, and then on the weekly chart, that fair value gap from November 25th. Here are the new week opening gaps, so do as you like. I like to use these. I like to first of all log them always, and then I like to also just use these on a 15, 5, and 1. So that's where it's like kind of really nice for me. 4 hour, not really much to say. Now that we got the monthly, weekly, daily out of the way. But you do see why I like the lower quadrant more, right? That SIBI right there. So, and also notice how that monthly level, I told you that on the lower time frame will really like work around that level multiple times. And you can see 1, 2, 3, 4, 5. So about 5 times in just this image, like a rough estimate. But really, I like to track it on a 5 and 1 minute chart and like kind of see like how many times, even inside this. Well, maybe not this, but like for example, like this candle and this candle, it looks like 1 or 2 times, you know. But it's probably more about like 5, 6, 7 times that where it just kind of worked around it, and then probably went up and then came up into here. Boom, consequent encroachment, very nice. And then came down and then worked around it maybe a little bit more. And it's weird ways that the algorithm works. Not really weird, but you know, next candle, open, fails to touch it, and then trades lower, and then just kind of works around it even more and more. So it's a nice level to watch for me. But yeah, 1 hour chart, once again, not much. Same thing. Now we just kind of, I'd look at this high and this low, dealing range, see what it wants to do. Here is Monday's open, right here. So true day open. You know, if I were to really, if I had to choose, I mean, it's kind of a little late now because I'm sure it's moved outside of this candle's high and low, but I really do like this low and this new week opening gap high as just for it to go down and touch there. That's not even enough space to take a trade. That's 2 handles. So really, the best thing to bet on, or to make money, or not make money, to sort of place a bet on if you're a gambling man, is to wait for the New York session. That is the highest probability thing. So wait for the New York session on Monday and then kind of see how it wants to move. Alright, zoomed out. I usually like to also do this is just on the hourly chart, work back until the last week or the previous week's new week opening gap shows on the chart. So right here, Friday 4 p.m. and then Sunday 6 p.m. So you can see how we also once again worked around that previous month high a couple times. So 1, 2, 3, 4, 5, 6, and yeah. So if I were to talk any more, I feel like this would go for pretty long. It was supposed to be 10 minutes, but now it's been 30. So I'm just gonna quickly scrub through these. The NASDAQ monthly chart. And notice how we're much further above the previous month high on NASDAQ. I don't think that's a sign of strength though. Weekly chart, logging purposes, not really much to say here. Kind of running out of time. Daily, once again, not much to say here, but SMT, that's all I'm going to say. SMT. NASDAQ creates higher highs while, oh man, I gotta go back. While the S&P is showing a complete different narrative or story. While, yes, I told you that the dollar is going to go a little lower, but I told you higher time frame, I'm bullish. So, what does that mean? I think that we have some room lower. So here it is, daily chart with the new week opening gaps. So if you were to take a trade at any point in time that you think this is gonna start to go lower, very nice level here, 21,649, so 21,650. All right, sell side below here, 4-hour chart. Once it works below that new week opening gap, if it comes back up into there, it can sort of bump into that and then start to work down into this low and this new week opening gap. So 21,650. And also, this fair value gap is a long way. I don't think it's going to go down there immediately or very fast, but do I think it can? Yeah, sure. But I would take it by a day-by-day basis and first wait for the FOMC press conference. NASDAQ, hourly chart. Here is that Monday true day open. This is the dealing range it's working in. So from the highest high or all-time highs, from here to this low. So measure that, and then you'll get your equilibrium, which you can kind of just eye and see how this Monday true day open is placed in a premium. So equal highs here, it could bump it and then start to work lower. But no, this would be more by an hourly basis. So there's that fully zoomed out to last week. Friday 4 p.m. close, Sunday 6 p.m. open. You can see we're here where we were. Or usually, the protocol is, where did we come from? Where are we now? And where are we likely to go? And yeah, so that's sort of what I explained. 35 minutes, not bad. Just tradition, I'm gonna finish my water bottle, stay hydrated, and then I'm gonna end the video. Hopefully my mic is good. It's in a new place, so I'm kind of worried it didn't catch any audio, but we'll see. Even if it didn't, screw it, I'm gonna still upload it. But yeah, I think it's good. I see my little mic thing moving as I talk. La 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 la. You know how it's green, orange, and red. Oh man, I'm so tired. I'm gonna go to sleep.